Good Thursday evening. This shouldn't be too long, but for me, it's kind of exciting. There's a few things in here that I want to touch on. Anybody who doesn't follow Granite really should. So, what Granite offers, and I got to know them pretty well when I researched them a lot, did my due diligence last year. I interviewed Will Ryan, their CEO. um, what they're kind of known for, they started in Europe. Will's in New York now, or at least their headquarters in New York. Um, and they were or they were the king of highly leveraged ETFs. And by highly leveraged, 2x, 3x, 5x, they actually had a 5x on MSTR. Um, can you imagine the volatility on that in the heyday of MSTR and when Misty was ripping? So now in the US, we've gone through various SEC approvals on leverage. There's a few 3x products now. When I was able to retire and make um, a small fortune playing the commodity cycle in the early 2000s. So again, I preach this a lot to you guys that when you study the markets and you follow some psycho guys and you really dig in, you can see waves of where the money flows go. And then even within that sector, let's say that the indexes, and we've had this, that the indexes for 15 years, the Dow, the Russell, the S&P, the Nasdaq are all going to boom, and we've been through those kind of cycles. Then you have sector rotation within that. So do you want to be for this 6 month time frame? Do you want to have more Russell exposure, or do you want to have more Nasdaq? Do you want to have more Spy S&P 500? Oh, by the way, I just saw that VOO took over by far, beating Spy as the largest. It's like 720 billion, approaching 1 trillion. So these money flows happen, and that's where the money is to be made. Um, I found the commodity super cycle in the 2001 timeframe when I was saying, "Oh my gosh, I lost all this money in my own stock or my stock in a high tech company that I worked for that I had acquired, and I knew where they were going." And the whole dot-com bubble, you start to sort of eat your own dog food. You start thinking that everything's going to rip. And I didn't really see the NASDAQ crashing from 5,000 to 1,000 and taking 15 years to get back. But once that bubble was kind of there, I said, how am I going to be able to retire now? I was in my early 50s. And how can I retire at 58, 55? And how can I I was making a lot of money, but I was destitute through a divorce and through the stock shares that I owned really losing values, and owned a lot. So I was like, and so I found the commodity super cycle. I tell this story for a reason now, people. And so that led me to saying, okay, let me understand the commodity super cycle. I knew stocks, I knew trading, I knew investing. And so I found all the nuances of that. And then I went back and applied it to other things. Okay, so when commodities aren't beating the indexes and the indexes are beating everything, you want to be in them. So now 80, 75, 80, it varies, percent of my investment is in non-income funds because there aren't many in the commodity cycle. Well, I'm kind of excited because I uncovered something from Granite today that's coming. I knew it was coming, but I didn't fully understand it. Now I went and back out and got their SEC and their Edgar filings, and I understand it to a greater degree. So I'm going to touch on that. But let me so that's what I'm excited about. I want to just let you guys know that Granite really is the king of all of these 2x, both long and short. So if you're sitting there, right, let's say that you're over leveraged and you believe in the greatest software company in the world right now, Palantir, and you're in all kinds of PLTY and PLTW and all these income funds that I like because of the underlying, but honestly, they can't keep up with the underlying. You can make so much more money being in the underlying, but you'll say to me, but Bruce, I know, So, but how do you hedge or protect that regardless? What if you're just long Palantir? All right. Well, what if you're in PLTW? You know, don't keep buying at the top. Always DCA. It's just like a stock. Look at a stock chart and say, hey, this stock's $10. I think it's going to be 150. Well, if you really believe it's going to be 150, then you buy it at 10 and you tell a neighbor, and the neighbor buys it at 15, and then he tells somebody how well he's doing, and then pretty soon people are buying at 20 and they're buying it at 50. And guess what? At 75, it went from 10 to 75. It needs a rest. So it's very likely it could go back and visit 35. Well, if you bought it at 75 and it went to 35, you're upset, right? You're like, oh my God, I thought this stock was going to 150. It is. Those are rhythmic cycles known as Fibonacci retracements. And so there's all kinds of technical analysis. It's never perfect, but there's probabilities associated with that. I did the exact thing using that on Palantir when Yieldmax launched it, right? They didn't even have it over at Roundhill. I bought it at $51. It, the underlying just went crazy. And when I saw the underlying Palantir go up, I said, it's stretched right now. It's going to retrace. So I think my Pulte was at 95. I was watching and I'm like, yeah, 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 go. I'm getting paid well. And my fund, it reminded me of Misty going from 20 to 40 and paying well. But I knew this time. So I put a stop order in at 90. I said, well, if it keeps going, I'll raise my stop. But it didn't. The next day, I sold at 90. Well, I didn't care that I didn't get the income. And I set an order. I calculated like 72 at the retracement that I thought was most likely. Well, within 2 weeks, I bought back 80. I set it at I only want to use 80% of the money I got because it may go lower, right? I probably should have broken it into 3 tiers, but sometimes it only dips and you missed it or whatever. So that $72 order went off and I deployed 80% of the capital. So basically, I took out $20 out of my cost of Pulte. I mean, 19, 18 and some change. Okay. But then it proceeded to, bounce. It got down to 70, bounced back up to 75, 80, and then proceeded intraday. I didn't catch this intraday. Down below, it went to like 49, but I grabbed a bunch more at 54. I was saying, hey, I got more capital. I'm going to use that 20%, but I'm going to put even more. That's how big I believed in it. And then I got frustrated recently, as you guys know, with Yieldmax on Pulte. So I went over and dumped it all and went to PLTW because I like the weekly payer. I like their 120% leverage because I'm bullish on Palantir. I think it go to $1,000. I think it's the best software company in the world. It's the best AI software company, and the software is always going to earn you more money than hardware. So while Nviy is king of the hardware for AI, Palantir is king of the software. They can go hand in hand. They both need each other, at least the best application, AIP, all the things that it does for industry. There's nothing like it. Snowy is a little miniature, and then you got emerging little AI companies that do different things. So enough of that, but what I wanted to say is why those cycles are important. and where the market is heading. I always say I want to go where the puck, I want to invest where the puck is going, not necessarily where the puck's at right now. I didn't even play hockey, guys, but I give a hockey analogy, right? It's easier than a football. I love college football. That's my, I know NFL is more popular, but sorry about the sidelights, but everybody can relate to something. So why I'm excited on Granite, but you guys have to be careful. I bought a little koi yesterday. I was just getting ready to go to bed. I'm in Southeast Asia, so I got an hour or two of the market, and then I go to bed. I was hoping to do this video when I saw the Granite release, but I just couldn't. I couldn't do the video, and I'm not that coherent if I'm really tired at the end of a day. Um, so I'm doing it now as I get up in my morning on Friday morning over here for you guys. So let's go over what they paid. So this is what the video is really primarily about. So TSYY, 22 cents. Yield on cost, 139.90. So what are they doing? They're paying like crazy. But if you're not careful, they're going to experience massive NAV. But I want to tell you about some of the new stuff that's coming and some strategies I have for hedging when you're in something, right? But if you're bullish on it, then you'll be able to be just fine, right? Misty performed as long as MSTR was going up, right? It might have gone from 40 to 20, but every time BTC and MSTR went up, well, all of a sudden MSTR stopped performing. So I said to you guys, you should be looking at BTC income funds, right? Bitcoin, other strategies that aren't MSTR based. And even given that, I'd rather be an MSTW right now than I would Misty. But hopefully that all fixed. I'm not a seer. I can't see the future, but I can understand what cycle people say and what probabilities are. And there's two things that I'm bullish on. I'm bullish on most all commodities, and especially gold and the precious metals. And I'm also bullish on BTC, but not all the altcoins and everything. Even though many of those will rise, I'm just not, I don't have the cycles, the time to go in and study them all and know which ones are going to move. So if you're really into BTC also, and you've got people you follow that study all that underlying, kudos to you, right? I don't have time for it because I'm doing it in precious metals and all the other things, and energy and foods and, you know, other items in there in the commodity super cycle. And then even within the metals, you have movement from copper to silver to platinum to palladium and the white metals and rare earths. And there's just a lot. And then on the energy cycle, you have oil, gas, coal. Even though people hate coal, is building 50 coal-fired plants. I mean, regardless, if there is some green movement in coal to make it safer and better. And it's just the energy boom, you all know it from the AI centers and everything else. I think the optimal there is nuclear. And within nuclear, I really like the small reactor play, but nuclear should go through the roof. These mining companies for nuclear in the next number of years also. All right, so 139.90 for TSYY on the yield. The pay on Nvyy, if you're in the Nvyy with the Nvidia underlying, it paid 100%, 99.94, 52.5. Look at this. 50, 50, 50, some 60s here in June when it was ripping. Xbty, the BTC, think this is a great fund. I like YBTC. I like the Simplify funds, Baggy and Biddy. I like Bido, right? So what I'm not doing here for you that I will do sometimes, but I am doing in separate videos, is just compare. I just did a comparison of all the Tesla-based funds. I do comparisons of all the NVIDIA funds. I do comparisons. I just put it out yesterday or the day before of all the BTC income funds. All right. And these are the spiders and the NASDAQ. And I do those as well. And I do a coin one, right? So I love their new koi. But I'm going to get back into the other subject. So let me finish these dividends. So 44.83. So you can see here that you have two of them at the 100 mark, one at 140, the Tesla one. So 44.83. And then now you drop down to 50%. But the issue is, are you getting NAV erosion? And the answer is yes in some of them. But that's what I want to talk about, these new funds that were filed on 623. I estimate around, I think, 817. I'll flip back to that page. When these new prospectus, you guys, so let me finish. I'm doing 50 things at once. 1787, 50% yield for Tqqqy. Their Spider Y Spy is paying 18, almost 19 cents. Okay. And then Koi, which really caught my attention, I bought a little bit more because it's pulled back in price. Now, I like where Coinbase is after the pullback. I mean, if you roared into Coinbase when it was 446 through these funds, you bought at the high. If you added some, no big deal. You just continue to DCA and you own it low, you own it high, and you're okay. If you're bullish, right? I'm bullish. If I'm bullish on BTC, then by default, yeah, Coinbase does a lot of the altcoins too. But when BTC's ripping and setting new highs, all the crypto lovers are buying even more. They're buying all the altcoins. I like the idea of the stable coin. Okay. I certainly like gold, right? So gold's really shoring up at this point in time. These miners are starting to rip. They didn't participate. If you understand a commodity super cycle, and especially in the metals, gold is the premier first couple of years mover. And we've had that. Then what happens? Everybody says, and I can't believe it. Think I'm an analyst. How on earth can an analyst sit there and look at a Newmont, look at a Nikko Eagle? I'm switching subjects, guys, but I'm trying to educate. You guys know my rants. But I watched this in the 2000s, and I know it so well. The analyst is sitting there. What's their job? They're financial analysts. They're supposed to study earnings. They're supposed to tell you to raise and lower, but it's a political game. It's not an art or a science like it should be. And so most retail stock buyers don't give a damn about precious metals. Oh, you gold bugs, right? And all that stuff. Well, I'm a gold bug when it's the right time to be a gold bug. I'm not a gold bug when they just finished their 8-year cycle and they're very likely to go down for 6 to 10 years. Been there, done that, right? You got to understand you're welcome. You got to know when to get in, you got to know when to get out. And this is a time to be in miners. Miners are now. So Newmont, I've been saying it for 2 quarters. Why? Because gold was 2,100 about 3 quarters ago. Remember, they're back in. So as the gold price moves up, they caught some of that. So they're digging it out of the ground and then they're selling it at whatever retail. Well, this last quarter, their average price was about 3,250. Gold's 3,450 right now. But when it was 2,100 3 quarters ago and you moved into the first quarter of 2025, now all of a sudden they're reporting sales of like 3,000, 3,100. So their sales and their earnings go up double and triple. And how an analyst isn't back in December of 2024 saying, go all in, we're giving it a 5-star, 10 rating. They still weren't projecting anything. So those guys ought to be fired, but again, it's political. So they will wake up and start singing the praises in another year where every single one of them, your Uber driver and everything else in 2 years is going to say, oh man, here's my favorite small gold play, exploration play. But he'll be doing that after they've run for a year and they're in the 8th inning, right, of a 9-inning game. It's just the way the world works. So you want to get there ahead of time. Every time I see a pullback in gold, I buy more of the gold miners because right now the little explorers, guys, they're scary good. Those things can go up 20, 50, and 100 times, but they're volatile. They're risky. You got to own a basket. If you pick one, it might be the moose pasture one where all they're doing is drilling and never going to find anything, and they're raising money all the time. So you're buying it at 50 cents, it goes to 40, it goes to 30, it goes to 20, but it's sometime regardless. You don't want that one because you got to do your research, but at some time, that thing will probably be $1 or $1.50, and then everybody's going to find out that they don't really have what they think they're having, but they got the right name, right? It's Beeline Silver, it's this, it's that, right? They put gold and silver in those names on moose pastures, and they call them lifestyle companies because those fraudulent small CEOs and their buddies do the same thing all the time. So you got that mixed in there with legitimate mining companies, right? But literally, some of these go up 100 times. They go from 6 cents to $6. And you know, I see it in the charts. I track all that. I'm constantly looking at that. But that's the speculative side. I'm not even suggesting that. Right now, the large caps have been performing, right? Gold's probably 3x from where it's at now in 3 to 5 years. Some people think it could be 10x. I'm just being conservative and saying 3x, you know, 10,000 gold. Go buy an Anikio Eagle, go buy a Newmont, right? What I did is I sold tons of Newmont puts back when it was $60. I knew second quarter earnings were coming. I sold 57.50. Now it's almost $70. So I've already made 70%. I can buy them back, right? I'll just let them expire because Newmont's not going anywhere but up. Anikio Eagle's not going anywhere but up. Now, if gold runs up to 4,000, 4,500, and it gets a little toppy, which it will, and probably retrace back to 35, then if they run another 40%, they'll pull back. But you just got to know where they are in the cycle, guys. So that's I'm leading to what Granite is doing where I'm really, really excited. So look at these, guys. This is fabulous. Tqqqy, 72 cents after paying 84, 180% yield. It was 199% yield here. But guess what it did? Let's go back and look. So it went down. I think when I bought some, it was like 24. And then I just bought when they announced that this morning. Okay, I don't think this is updated, guys. Let me check. These are pretty easy to pick up, the currents. No, it is. Okay. Yeah, that's about where I bought this morning. And then it ran up into the mid 22s and then it's pulled back. And it may have pulled back. Yeah, so it's real good yield. Now, I like where Tqqqy, underlying coin, is on its chart right now. I was going to show you a chart, but I don't have time for it. I'm going to get out of here in a minute. But here's where I'm excited. So these guys on 623, these are more funds that they're going to come out with. Okay. But again, going back to what I told you about Granite, Granite is the king of leverage funds. These funds here, okay, it's great to have leverage and high leverage when it's ripping and roaring. But if you own that fund when it's not, what does it do? It starts going down. Misty is the show on that 20, then 18. Where's it going? Well, it's all up to Bitcoin and MSTR. Unfortunately, it's up to MSTR. So if they start performing again, then Misty's going to start performing again. But the BTC funds are performing right now, and they'll continue to perform it when BTC goes up. So, you know, that's why I got out of Misty. I'm not saying get out of Misty because some of you guys you remember the glory days and you hate to tell yourself it's changed. Well, it's changed for 4 months. Will it get out of this funk? Hope so. I don't own it anymore, but that's okay. I'm not saying you shouldn't. But don't just tell me, look what it did. I got all my money back. I did that. Yeah, it did all those fabulous things. Guess what? You know, IBM was the best software hardware company in the world. But I'm talking 1980, 1990. Okay. It's not relevant anymore, is it? In the same way that it was. I lived through that era. You know, I worked there. I went to a lot of IBM schools as well. They're a great company to educate you. So, you know, there's a lot of companies. Cycles change. You know, AOL was a great place to be 20 years ago. Netscape was the #1 browser. Where are they today? DOS was fantastic, Windows DOS for years. And then when Apple came out with their GUI interface, that was the greatest thing since sliced bread. That's really what forced Windows to become GUI. So there's a lot of things that have their day. And I'm not saying anything is completely done. I'm just saying software always outpaces hardware. So if you have a leader in hardware and in that same sector you have a leader in software, I'd rather own the software. Nvidia is a fantastic company. All right, guys. So let me clarify this. So here's what's coming. These are just, look at the amount of funds that Granite has just as a 2x ETF. Well, how do you play these? Again, let's go back and say, hey, I am over leveraged in Misty and I worry about Misty going down. And I've got a ton of it. I love the income. You can't tell me I'm not going to stay in it. So fine, no problem. But what are you doing to hedge? Do you own Winter? I said at one point I thought Winter was okay, but these inverse funds, for the most part, haven't lived up to it. I haven't checked it lately. But at that point in time, I said, you know, but, oh, I changed the order when I sorted these. They have a MSTR short in here, 2 times short MSTR. So would I go out and buy the same amount of shares that I have of, let's see, can I resort this? Oh yeah, now it's back to its other way. Let's see. Here we go. 2 times long. Where's my 2 times short? Here we go. 2 times short, MSDD. Hardly any assets under management. Everybody's afraid of that one. But I might buy a small piece as my hedge against my Misty, right? Misty keeps going down. But Misty's going down because they're trying to pay the income that they didn't earn because MSTR, let's say, is flat. So their synthetics aren't making any money. And then if they happen to lose on their weeklies and their spreads, they got no synthetic bailout. They got no help. So these guys are the king of this. I'm really excited, okay, if they can get some of these things launched that I saw that they're going to do. And for me, this one stands out. Okay, remember how I talked about commodity super cycle and how I'm in the miners? Well, I can go out and buy GDX. I can write my own options. I can go out and buy Direxion's Nugget when I'm really bullish, and it's 2 times GDX. Okay, but they're growth methods, they're not income methods. And then I can go out and buy GDXU, which is 3 times GDX. Okay. But GDX is just finishing running, and there's going to be the movement from the large cap guys in the next upload to the medium sized companies, the smaller miners. And then eventually, probably in 12 to 18 months, I just listened to Rick Rule, that's where I got this number, is that's when the explorers and the developers, okay, the project generators, that's when all those little guys will go nuts, okay? But do you want to wait till they go nuts, or do you want to own a basket of 5 or 10 of them and, you know, depending on your budget, put $1,500 in them? That's what I've done, a couple thousand and 10 of them each. and just hold them. I do. I have those now. And some days they, even now, some days they run up 10, 15%. Sometimes they pull back, but the real money is not going to be made until later in the cycle. But why I'm excited about Nvyy is these new ones, and remember, they're just like EOMax in that when they changed their strategy, like what Ulti's doing now, Ulti's putting collars on, spreads, all that stuff wasn't eligible until EOMax went and refiled. I mean, literally, you have to say, here's my ETF. You know, it's a single stock company or it's a portfolio. We're going to sell call options. Now we're going to sell call options and spreads. Okay, so we can have a little bit of insurance. Okay, or we're going to do swaps. So these guys have a sophisticated put spread strategy with swaps. Okay, and they're going to do it on Direxion's GDX, okay, or whoever has GDX, but the leveraged GDX is the nuggets is coming from Direxion. So I think somebody else actually puts GDX out. But my problem, guys, with EOMax, I own a little GDXY, and I tell you guys, it's better to own that in a way because I know GDX is going to do really, really well over the next number of years. But here's the fallacy. Here's the problem. I look at the GDX chart. It's up like 59 or 60% now year to date. Look at how pathetic GDXY has performed. And yet, I showed you how it's not far from beating Ulti and Misty in total return when you look back 3 months and 6 months, because that's when GDX, it's when the miners have woken up. Well, guys, they're going to do well for another 4 or 5 years. But look, if GDX runs up 100%, what's it going to do? It's going to pull back 50 or 0.618%, right? You don't want to be buying at the top. Can I always predict exactly the top? No, but I can see when it's stretched. How far does it typically run above its 200-day moving average? And as it approaches that level, I start pulling back in any new purchases. And there's where I can go out. Direxion's got, okay, dust. They've got a 2x GDX long called Nugget. They got a 2x dust, okay, inverse. These are no income guys, but they do their job. You don't want to hold that with decay for 8 months. But when it gets toppy, that's what you want to buy for insurance. So these guys are going to come along now and produce, they're going to go 200 leveraged on income with their methods of swaps and their put strategies. And so I'm excited about having something called Nvyy. My estimate is this is a 623 filing. They checked the 60-day instead of the 75-day. If that works out, add another 5 days for handshaking. And, you know, I've got somewhere around 827 with maybe 911. No inference to, no pun intended there for, you know, what happened on 9/11 years ago, but around that time frame, so 827 to 9/11, 9/17, we should see the different ones that they choose to. Remember, a company files, gets approved, and then says, just like what Roundhill did, okay, well, here's five. Okay, here's five more. Because they have to go borrow the money to launch those funds. When they launch it, almost nobody owns it. So they've got to go out and put the calls and buy, if they're buying the underlying, they got to do all the things that they do. So that's borrowed money, right? And then when you start to buy and the assets under management grows, they can go back and pay the found, you know. And if you're a giant company, your Vanguard, your Fidelity, you have so much wealth, you don't have to borrow it. You just use your own money. But when you're a smaller company, an ETF fund family, you have to borrow. So I just see a lot of things in here, guys, that I can play and hedge and do because that's been my frustration. I'm in GDXY and it kind of sucks as a performer. I'm better to be the underlying, and I know, and yet I want to watch it to see how much it can pay. But the IV isn't really high enough because the retail market hasn't woken up to this as a place to be in. How can they when the analysts aren't even promoting it, right? They're always behind the eight ball. It's sexier to come out. I mean, gold, if you had anything related to do with gold, most of the firms don't even care about that. It's like a counterculture. But the reality is this boom and bust cycle in commodities happens every 10, 15, 20 years. And when it happens, it massively outperforms all of these indexes, all the stock indexes. But the stock market, people would prefer that you didn't really know about it and didn't participate. Futures does. Okay. All right, guys, that's my rant. So I'm excited about that. I'm going to do more videos on that. But I just looked the other day. It's horrible. I looked at the classic comparison. I'm going to put this out. I really should have had it here. I got GDX on the chart going straight up to the right. I got GDXY right down here changing 5 or 10% and this thing's up at 55%. Yeah, it's paying a little bit of income and it's ranking pretty good over the last 3 months and the last 6 months against most all of YieldMax's funds. But I know what it could be doing if the right income fund strategy was out there. And I'm telling you now that it's coming. And if you have a favorite area, it's going to be coming for that favorite area as well. All right, guys, I'm going to let you go. So these, again, I buy these with caution, but at the same time, whoops, let me go back up here. These are they are paying fantastic. But again, are they a yield trap? Well, that's for you to decide because you got to know if you're bullish in that underlying or not. I was just talking the other day about how I think Tesla will wake up. I don't know exactly when. I'll be watching the charts, but I think it's got a lot of promise over the next couple of years and it's been beaten down. So these guys pay, but look, this is going back to 24, so it's not going to look good. It's got a negative return, but they're paying money. So the real question is what's the bottom for Tesla? If you can get anywhere near the bottom and just start owning it, that'll end up a good income fund in the right method. Okay. YieldMax only captures about 33%. So if Tesla takes off and runs from wherever it is, 300 to 600, you're not going to do that well. You're going to make some income, but you're not going to capture that much of the upside. So I'm excited about these leverage funds from Roundhill on the weeklies to what YieldMax, or sorry, what Granite Shares is moving to, because they're not currently leveraged, not like how they want to be. They're just writing options, usually puts, on some of their 2x funds. But when they actually use the strategy with the swaps where they can get 200% leverage, kind of like MST is doing on MSTR. Well, when MSTR isn't performing, what's happening to MST? Massive NAV erosion, right? It's bad enough in YieldMax, it's way worse in MST. But what happens if MSTR starts ripping? Well, MST is going to go up very, very good. Going to pay even better and go up. Today it pays good. It's just NAV is killing you. So, income funds in a way aren't any different than investing in growth. They just have income. You got to time your buys, right? Everybody says drip, 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 which is another way really of DCAing, right? Because you're constantly, and if you don't need the income, my question would be, Why aren't you doing a 50-50 or 75-25? Buy a certain percent of the underlying if you're bullish and buy some of the income. But just doing the income alone and dripping, you may not even come out ahead of the game. All right, guys, that's what I got for you. I'm going to let you go. Granite to me is a player to watch. So on these new ones, unfortunately, you had to buy 8-7 because tomorrow's ex dividend they pay next week on the 12th. So you got to look for that announcement. It comes in a couple hours typically after the market opens on Thursdays. So if you're ahead of the game, sometimes I think last week I was able to get it out. I stayed up later, but I had worked out pretty hard yesterday, ran a lot of errands. So by the time the night came, I just couldn't do the video. All right, guys, I'll let you go. This has gone way too long, but hopefully you'll listen to some of the rants and understand the market's a little better, the sector rotation, the dynamics, investing in these income funds. Just think of them as like growth stocks, although they're producing income. Do you buy the stock when it's run to 5 to 10? Yeah, you get all excited because it's going to go to 20. But guess what? Maybe it's going to go back and visit 7.5. You go all in at 10 and you're super frustrated. You got no powder. You didn't leave dry powder. You got no more money. So buy in tranches, DCA, do all of those things in these income funds just like you do in growth stocks. All right, guys, bye for now. It's not financial advice. I'm not a financial advisor.